Scott Wren is here from Wells Fargo Investment Institute. Scott, why the sharp turn lower here?
Well, Sarah, I think we're going to continue to be very sensitive to any talk that has anything to do with stimulus. You know, the market's really, the way we've rallied here is that the market's expecting better medical news in terms of a vaccine and things like that. The Federal Reserve being very easy, and stimulus. So I think all three of those things are very important, and we've got one leg that's been pulled out or at least is wobbly, and that's whether or not we're going to get stimulus. But in our view, it's going to come, but we just don't know what the timing is.
So if you look at what's being sold the hardest right now, communication services, as I mentioned, healthcare and technology. What's holding up the best in the sell-off? Utilities, materials, and consumer staples. How do you make sense of that, given everything right now, the ongoing debate over growth versus value, and what part of the market you need to be in?
Well, I think, on sell-offs, generally, defensives have been hanging. You would expect defensives to hang in better. For us, we've been leaning more toward growth. You want to be with these companies that can make money whether the economy's good or bad. So I think right now it's a little choppy out there. It's a little confusion. Do you go for the traditional, staples type of place to hide, or do you hide in growth? And I think that's a battle that's going to continue to play out. But for us, these big down days, big down weeks, those are opportunities. We want to lean toward large cap. We want to lean towards growth. We like communication services. We like tech. We like consumer discretionary, and we do like healthcare. So, that's the way we're leaning, and we want our clients to step in, because most retail investors, they have too much cash, at least in our opinion.
But I mean, you said big down days, big down weeks. It's only the former at the moment. Last week was positive. Month to date, we're up 2%. So are you advising clients to buy aggressively in this final 40 minutes of trade, or do you want to wait till the end of the week and see?
I tell you, Wolf, for us, we want to look out further. And we've had, if you look from these March 23rd lows, we have had many, many opportunities to step in and buy stocks. Now, 400 points down in the Dow, that's not going to make or break anything. We want our clients to have a plan, be ready. And when you see these big down weeks, we don't want them in there trading, but we want them to step in when we see these big down weeks.
So not yet.
That's right. I mean, I don't think there's any reason to step in here. You would expect some back and forth. We're likely to trade a little lower. Do we expect a 10 or 15% sell-off? We do not. But if you get down, 5%, something like that, 8%, it's another time to step in.
We're about 4.5% off the record highs, just for perspective there on the S&P 500. So you're saying another 5%?
No, Sarah, I think, if you're looking from the record high, we were down 8-10% from the record high. We were definitely telling our clients or recommending to them that they step in. You have anywhere where you're north of 5%, 5 to 10% down. We just don't think the market has a lot of big downside right now, because we continue to expect reasonably good medical news. As I said, the Fed is certainly going to be easy. We do expect this stimulus to come, probably not before the election, but whoever gets elected is likely to get some stimulus through, and it's not going to be a small dollar amount.
Shepard Smith here. Thanks for watching CNBC on YouTube.